The best part about stocks at all-time highs is they tend to keep going higher. We'll discuss today if that's what we think is going to happen with the SPY and Qs hitting new all-time highs yesterday. Of course, driven by none other stock than Nvidia, which is gearing up for its big split. We'll talk about that today. You had Lululemon report some earnings yesterday after the close, trading higher. We'll talk about that as well. We've got some other headlines in that we will discuss. We do have Mark Chaikin joining us 8:15 a.m. Eastern. Should be a great show. Let's go ahead and get it started. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Alrighty, let's bring Joel in, go through the indices before we start the show. Joel, how you doing this morning?
Doing okay. All-time closing high yesterday. We're up a stick before that, 1.5367. The buck steady here, up 8 cents, 104.30. TLT taking a little breather from that 5-day run, down 26 cents, 93.09. Crude crawling its way back up 50 cents, 74.57. Gold and silver both in the green. Silver, a little bit more on a percentage basis, back over $30, up 35 cents at 30.43. And Bitcoin down slightly, down $240 at 71,650 cents.
Alrighty, let's go ahead and bring in Dennis. Dennis, how we doing this morning?
Doing good. So, what are we going to talk about today?
All right, well, there's obviously one thing. So the first headline that I see when I log on this morning and I start going around in the different sites to see what's happening in the market, I see this headline that says the U.S. regulators are going to start an antitrust or look into some antitrust claims against Microsoft, Nvidia, and OpenAI. Now, this matters to me because I have some Microsoft calls that I'm holding right now that I'm actually up a lot on. I'm up more than about 400% on these calls,
Nice.
but I held them overnight. Well, I sold some of them yesterday, but I held the rest overnight. And I look at Microsoft, and it's trading, down a buck or whatever on this news. And I'm like, oh, well, okay, so regulators are potentially looking into Microsoft, Nvidia, and OpenAI. That makes sense. Maybe some people are a little scared, selling a little bit. Go over to Nvidia. They don't care over in Nvidia land.
They don't care.
They don't care. It doesn't matter.
It
doesn't matter. So you look at Nvidia this morning, and it's doing the exact opposite as Microsoft, which is maybe my lesson is that why buy calls or go long or buy anything else other than Nvidia right now?
I question this every day. Why do I own anything except Nvidia? The stock goes up every day. This has got to be the best pre-split run that I have ever seen in my life. And I've been trading for 25 years. I don't remember a stock going up 20% basically in a straight line. I guess there was 1 or 2 days in there where it gave you a little bit of spooked when the market sold off, but pretty much straight up every single day. It's like clockwork. Buy it at the close, sell it at the open, make money. Unbelievable run. No, I've not sold any more shares out of my long-term account. Do I want to sell some shares out of my long-term account? Probably, because the dang thing's, just so textbook split trading, up 20%. You got to think next week it's probably going to have a pullback, the buyer exhaustion. But everybody wants to get in there ahead of the split. Unbelievable move here. Nvidia, just a monster. And it passed Apple officially yesterday in market cap. It's coming for you, Microsoft. It's like not far behind. I think it's like 1.5% behind, and it might get it today.
So, okay, if I not even just pre-split run, well, let's just talk about the run in general. If I told you, Dennis, that you were going to buy a stock today and hold it for 5 years, and in that 5 years, that stock you bought today would go up 300% over that 5 years, would you take that?
Yes.
Okay, so here, I'm going to pull this up real quick. And this is, I don't know if this is new from Google Finance. You can do this in Benzinga Pro too, but I was doing it on Google because I was testing out their new tools.
Sure.
Let's look at this chart real quick. And here, I'll give it a couple zooms in. This blue line right here is Apple over the last 5 years. It's up 312%. but it looks pretty damn flat on this chart because in the orange line, because the orange line is Nvidia. And you start to see here, right in 2022, after that big sell-off that we got that brought a lot of these tech stocks down to kind of reasonable valuations. I mean, I remember at this time, Microsoft and Apple were trading at like 25 forward PE, and it was like, holy cow, you can buy these stocks at like this valuation. And then over the last 2 years, since October 2022, so really the last 18 months, you just look at this separation. And again, Apple is up right here. Look, $148, 312% in this time frame, 5 years. You might as well be looking at like a flat stock here because compared to Nvidia, which is up more than 10 times that in the same time frame.
3,000% in 5 years, Nvidia is up.
So we're not talking about just, I mean, this pre-split run, yes, is the past like couple months, which I don't think a lot of people foresaw this going from 942 to 1,200. But this is just absolutely absurd how much separation there is between. And you could throw other stocks in here too. Look, let's add comparison. Let's throw Microsoft in there, which has gotten like more of a, I mean, wow, Mike, that's surprising. I would have thought Microsoft.
Yeah, I would have thought Microsoft outperformed Apple, didn't.
Yeah, over the last 5 years, 100%. I would have thought that. I mean, you name any other stock you want. What's another? I mean, like one that's got Eli Lilly. Let's look at Eli Lilly over the last 5 years.
That'll be good. That'll be a good one.
602%.
What about AMD?
Oh, okay, good. I'm gonna guess AMD is at like 800%.
I don't think so.
Okay.
I don't. Maybe
400. So I had it. So Eli Lilly has even outperformed AMD, which that shows you how strong Nvidia is. That even the
somebody said put Tesla.
Okay, even the direct competitors in the space are up like a fraction, up a tenth of what Nvidia is up. Tesla is up. Oh wow, almost
1,200. Not bad.
Not bad. Okay, so look at Tesla.
Wow.
You got in the purple.
Wow.
I mean, yeah, from there on. I don't know, Joel.
GameStop.
Okay.
We're gonna do the whole damn show just on this.
Fun exercise. Oh, we
almost got to Nvidia.
That can compete. GameStop.
2,425%. Yeah, when it was at the high.
Hey Dennis, why don't you you at in the pre-market show you talked about the split and the confusion regarding the record date.
Okay, we're gonna stop talking about Nvidia when Mark comes in, but there's lots to talk about Nvidia. So there's a lot of confusion here revolving around the split. Multiple people asking me the same question, which is a common question around splits. What happens if you trade this Friday? Because the record date is today. So if you own shares at the end of today, you're entitled to the split. But it doesn't split till Monday. So if I buy the stock on Friday, I'm going to be buying it at $1,200, but I'm not going to get the split. That's what's going to happen? That's what people are asking. And what happens is there's actually a rights transfer that happens on Friday. So confusing, but all you need to know is it's technically actually Friday that you have to hold the stock for. So what happens is if you own the stock Thursday and you sell it on Friday, you give up the rights to the new shares. If you buy on Friday, you acquire the rights to the new shares. Yes, very confusing and very dumb that they do it that way. And why is the record date before the X date and all those questions there? You can ask all the questions. This is the way they do it. This is the way they've always done it. So there's a rights transfer. So if you buy the stock on Friday, you actually still get the split on Monday. If you sell the stock on Friday, you give up the rights to the new shares for Monday. So it's technically, if you just wanted to, technically it's Thursday, the record date. But if you want to look at, if you actually own the stock at the close on Friday, you still get the new shares. So don't worry. People are saying, I'm just going to load up. I'm just going to sell all my shares short here on Friday because I don't have to pay for the split. Now, there's a rights transfer, folks. There's no free money out there. It doesn't work that way. Stock will still be trading $1,247. And all you need to know is if you're buying it at $1,247 and you hold it through Friday's close, you will get the rights to the new shares. There's your answer.
Well, you said there's no free money, Dennis, but it seems like there is. And
if you just bought. But the thing we talked about, the pre-split run, just buy the thing ahead of time. So, okay, and then the other question, we're going to talk about it for another 5 minutes, and I want, AB's got a story here too, so we want to leave 3 minutes for him. But, I mean, this has had such a textbook pre-split run that it almost feels inevitable that it's going to have the textbook post-split sell-off. Talking against my book, I'm going to hold Nvidia through it in the long-term account. But I kind of think, you're going to top out. I think it will open higher Monday. What typically happens on the splits, they open higher because everybody's excited. It's a lower price stock. It opens up higher, and then it leaks and ends up closing red. That's what I'm predicting for NVIDIA, is actually that it technically opens higher on Monday, trades in the pre-market higher on Monday because everybody's so excited as NVIDIA has a $125 stock. And then the buyer exhaustion happens and the sellers come in. And I do think you get that post-split sell-off happening after the open on Monday. Trying to time it perfectly for you guys. AB, tell your story, your buddy.
Yeah, so I mean, I like a lot of kids grew up kind of, I like to play video games, and I would always, I'd get a couple hours in maybe after school before I did my homework or after I did my homework, and my dad and everyone would say, Aaron, you're never going to be able to make money playing video games. Well, that hasn't turned out to be true for a couple reasons. A, because there are some guys out there now that are like streamers and stuff that make millions of dollars gaming. B, anyone who was building their own PC in like the mid 2010s, 2015, 2014, knew about Nvidia before I think a lot of the general investing public. And one of those kids was one of my buddies who I just pulled up my text with him about this the other day because we were like all frustrated being like, oh, we should be retired off of this. But my buddy bought $1,200 worth of Nvidia back in, I want to say 2015.
Wow.
He said his position is worth now. He doesn't even want to look at it. He said, but his position is worth over $100,000 off 1.2 thousand invested. And he never wants to sell his Nvidia. And now
100 banger.
However many shares he has, he's going to have 10 times those amount of shares now going forward. And what's again kind of frustrating is me and this buddy, we had talked about a number of times over the past couple years, like buying leaps on Nvidia. And actually he said, this we were talking about it just the other day. And he said, the crazy part is, I was like, what? He says, I think it doubles again in 2 years. So his price target's like $2,000 for Nvidia right now. And he's still holding on to all his shares. But again, like if you were in the gaming space, if you were building your own PCs, and I was joking about it to Dennis before, I was like, there are probably a lot of kids out there who told their dad, who's like in finance or a stockbroker or something, like, oh, Dad, you got to buy this Nvidia company. I just bought this new graphics card for my computer.
Yeah.
And the dad didn't do it. And now the kid's looking at him like, come on, what are you doing? I told you, to buy this.
Yeah.
Thing. Look at Lowell in the chat. He's got a video game thing as his thing. Bought Nvidia cards back in 1998 to 2020. So this is my point exactly. It was that if you're in the gaming space, you knew about this stock, this company 20 years ago, and a lot of people are probably just now hearing about it through AI for the first time in the last couple of years.
Well, and I mean, we've talked this back in the show, and we've been doing the show, me and Joel, now for 10 years. And I can remember back in 2016 and 2017 talking about NVIDIA as a crypto play because you needed, obviously, the faster chips to be able to, buy and sell or to mine crypto. So, I mean, and mine Bitcoin. So this was a mining play. Like this is where we were talking about. NVIDIA was moving with Bitcoin pricing in 2016 and 2017. Bitcoin was almost controlling NVIDIA pricing. And now you don't even think of NVIDIA as a crypto play, but it was back, 6-7 years ago. And we talked about it at that. Man, we need that time machine. Go back and put $1,200 in, or $12,000 in NVIDIA. Wouldn't that be nice? Congrats to your buddy.
And I will say the one thing, and I obviously haven't been in the markets as long as a lot of people here in the chat or yourself, Dennis or Joel. But I've felt even over the last 4 or 5 years, a few times where I've like missed something. Well, to be fair, I do own Nvidia, just not that many shares, not as many as I would like. I don't think anyone owns as many as they would like, or
more.
And honestly, at this point, if you just own SPY, you're like 6% exposed to Nvidia, which is nice. There's been a number of times over the past 4 to 5 years where I've like missed out on an opportunity and thought, oh my God, this was a once in a lifetime investment, a once in a lifetime trade. I didn't capitalize. And then there's always another one. So if you've missed out on this Nvidia run, and I'm not going to say, I guess there'll be another Nvidia tomorrow, but eventually there will be other opportunities like this. So I wouldn't beat yourself up too much. And I don't think most people, again, have as much allocation to Nvidia during this run as they would have liked. I mean, how many like once in a lifetime trade opportunities have you guys seen?
I know. and this is always the way. And I look at my portfolio and think, why did I sell any? Because I bought at 400, I bought at 500, I bought at 600. And then I sold some at like 700, and I sold a little bit more at 900. And I'm like, well, why did I sell any? You know, like I was so convicted. I even said it's the most valuable company in the world, and here I am lightening up my position. I have like half of what I did and when I had at the max.
Because that's worked a lot of times over the years, and
it felt like too much too fast, Joel.
Yeah, I mean,
like, and then I was like, oh, I'll get it back cheaper, but then you don't rebuy, and then it's like, oh, now it's $1,248. Why did I sell any?
I was talking to a buddy yesterday, and it was just like it overtook his portfolio, and at certain levels. And he said, why did I do that? And he just was following, basic principles of investing. So you do have your outliers in situations like that, but it's hard. You look, Dennis, you look at your stuff every day, so it's
too
like,
much.
Yeah.
Best thing you do is not look at the long-term portfolio. That's the best thing you can do is not look at the long-term portfolio.
All right, I see our man Mark Chaikin hanging out backstage. We love Mark. I'm not going to keep him waiting any longer because we are a minute past due. So without further ado, let's go ahead and give Mark Chaikin our very special Zinger Nation welcome and catch up with Mr. Chaikin when we get back. Mark Shen at Chaikin Analytics. Are you able to look and focus on anything else other than Nvidia right now? Or are you like us, where you're so enamored by this move that it's taking up all your brain power?
It is not, except it's a nice little tailwind for the market because
the market.
You've got a lot of money managers who are, as 2017, 2018, when the quant stuff failed, they're underperforming the benchmarks if they're not overweight Nvidia. So it's tough. But I mean, I have a real world story. My wife Sandy had been buying Nvidia since 2021, and I just gave her the old Wall Street mantra. When you have a double, sell part of your position. And so she's pared it back twice, but she's got no cost Nvidia now, and it's about 35 to 40% of her original position.
So you had your wife sell some of her Nvidia. How is it sleeping on the couch?
It's not comfortable. I only suggest, but it's an amazing wealth builder for anybody who got in and even stayed in part of it. But I do think it is a great tailwind for the market for two reasons. A, it's now the largest cap stock. So anybody who buys the SPDR or the QQQs, it forces them to buy Nvidia in proportion, and managers are underperforming.
Where's it at on the gauge? Where's it at on the market?
Oh, it's been bullish. Power gauge?
No, not bullish, but like everyone is like Dennis talked about the split and the activity, the run up into the split. I mean, what if you get in an Uber tomorrow and someone says, boy, I've owned Nvidia for so, what technical, what would you use? Do you just forget about it and you never sell it?
No, or you know better than that.
Well, I'm just asking because I look at it. We talk about it every day. Spend a lot of time on it, and there's just there's no technical analysis here. There's nothing that you could use the indication. So what I would be looking for, is like some consolidation, 3 or 4 highs in the same area, how it reacts to a downgrade. But I just wondered, if your wife came to you and said, I want out, what would you use? Would you put a stop in at 1100?
No,
something like that?
Stops are for sissies. Come on, that's no good.
I'm asking you, what would you use, Mark?
If she wants us, I'd just say sell a spike the next time Bank of America raises their target, sell into strength, and just say thank you.
How do we get any more strength than this? Like, I'm long Nvidia, and I'm kind of nervous actually this time because it's up 20% on the split run. You often see stocks run up ahead of a split, but this one's been absolutely
This is amazing.
It goes up every day.
Hey, if you can tell me when the demand for their chips is going to abate, then I can tell you when the stock will top out. Remember yesterday, 2 days ago or yesterday, Bank of America said Nvidia could go 40% higher based on the current chip demand. So, but I think, quite honestly, it's a nice attention grabber. But talking about Nvidia is like sort of talking about Scarlett Johansson to a guy who's looking for a date for the weekend. It ain't happening. So,
okay, well,
Never
give
say
us the
never.
date for the weekend. We
Never
want to
say
know
never.
what the date for the weekend is, Mark.
well, my favorite tech stock is and has been Qualcomm, and it's up there making new highs. It's not garnering the headlines, but boy, they are well positioned for the next 2 to 3 years, in my opinion. And then some of these stocks that are involved with data center build outs that we've talked about. So VRT, Vertiv, in a little bit of a pullback phase. I think you got to look for stocks like that if you like the fundamentals. Fix Comfort Systems, which we talked about a couple of weeks ago, had a pullback. It's in the process of reversing. These are the stocks that I think have legs in the less sexy part of the AI space.
And then, in the past, we're talking about we're talking about data centers again here, but you mentioned IT plays. Maybe we had CrowdStrike report a few days ago. Are you still bullish the IT space based on this, on the fact that AI could be a tailwind for this, for these companies?
Well, I sort of got trapped in my own creative thinking because some of these consulting stocks have really pulled way back. So I think CrowdStrike's a different story. Cybersecurity is fair game in anybody's portfolio, but as you know, these stocks are difficult. Look at Palo Alto Networks, took some big hits and then finally found some buyers with, I think they were at a conference and they spoke well, but you got to be in cybersecurity. It's just, if you look at the stocks, Fortinet, Palo Alto Networks, they've really taken some hits based on short-term earnings shortfalls. And so the purer you get to cyber, the better you are. And Fortinet's in our 2024 portfolio, and I'm not happy with that. But all you need is one good quarter, which you got back in November, and the stock will take off again.
Can you talk? You said you got trapped in your creative thing. Look, can you talk a little bit more about that? Is that you're saying that you you're foreseeing how these things would play out with AI and companies adopting AI, and then it wasn't happening exactly how you thought it was, so then you're adjusting your positions, or like what exactly is that process like?
That's pretty close, Aaron. I still believe that as small and mid-sized companies and the large ones obviously get the message that they have to employ AI in their workflows and their businesses, that their only choice is to go to the consulting firm. So stocks like Gartner, symbol IT, companies that are in the consulting space, I think long-term are good, but you can see the hit that they've taken. There's one called GIB, which we put into our 2024 portfolio. I hope it's not GIB. Yeah, it is. So, these stocks have corrected mightily. They're great companies. They generate cash flow. They're human capital intensive, but typically they're billing hours. So I think if you go through the consulting companies, you find some real gems.
And then another, I know a few weeks ago we discussed companies, that are able to essentially mine a lot of consumer data from their customers, are able to kind of have this leg up on other companies that don't have as much data. Anything you're seeing in that space? I know Uber was one that we talked about.
Yeah, Uber, absolutely. I don't think they've really announced any data mining revenue stream yet. But clearly that's the case. I think Salesforce now has a data cloud, which enables you on the fly to pinpoint usage, subscribers, target people for mailing campaigns. So that's the ES, that's not Salesforce. But Salesforce just took a big hit on earnings.
Salesforce actually yesterday, after the close, it was disclosed that ValueAct has taken a position there. So that's sometimes going to be a catalyst there. It's not getting any media attention at all. I just wanted to mention that while you mentioned Salesforce.
Yeah. So let me tell you an interesting story, and I think it'll point our viewers to opportunities, and it speaks to the legs that AI is going to have over the next 5 to 10 years. My son Eric, who's you may have met him, Joel, at a conference once. He heads up a 10-man software team, and they do what's called a scrum once a week. Everybody stands around, discusses the business, and you come away with a to-do list or key points. So after the meeting, which typically lasts 45 minutes, he started typing up meeting notes. While he was doing that, one of the other people on the call sent him meeting notes generated by Copilot within Microsoft Teams. And it wasn't just a recap of what they said. It attributed it to certain people. There were two Erics on the call. They knew the difference between Eric Chaikin and the other Eric. And it actually sussed out motives. Barbara said she's going to do this, and I think she's doing this because it's unbelievable. And that's going to permeate through every organization, whether it's Microsoft as the beneficiary or Google or Salesforce. These tools are just amazing. And in 2 years, we've gone from shackles on our ankles to rocket boosters in terms of productivity. So I think that's a really interesting example of where AI is just going to make a big difference.
There's going to be a lot of jobs replaced too here, though. Like, think about the editorial departments where you have editors going in, and obviously maybe there'll still be some because AI isn't perfect. But I mean, typos it's going to grab and, all this other stuff. You're going to need a lot less editors, like certain
Indeed.
jobs. Your certain jobs are, and especially more blue collar type jobs too. Not saying editors are blue collars, but think about that. I guess that's always been under attack because automation has replaced lots of jobs, even the automotive industry or whatever. But I mean, it's going to continue. I mean, is there a tipping point where the benefits from AI to the corporations eventually hit the consumer hard enough that it actually hits demand?
I don't think so. I think what you just talked about is the shift from a goods economy to a service economy. And AI is just accelerating that. And so the service sector is where the growth is going to be. That's why some of the traditional economic indicators like the LEI, which was predicting a recession for 16 months, don't work anymore because they're based on the notion that we're a manufacturing economy. So I mean, anything's possible, but short of, I don't see the jobs market impacted particularly. I think people will transition into jobs where they can take advantage of AI, and instead of trade schools, you'll have programming schools, which you already have. But I tell you, I went back to ChatGPT for the first time in about 3 or 4 months, and I was using it to write in the Stansberry style or in the Chaikin style, and it did a pretty decent job. But I read somewhere that you can build models on ChatGPT, just give it a spreadsheet of data. Well, sure enough, it started writing Python code and executing it. I was trying to target a price move in the S&P down the road, and where it stopped short, it basically said, we're resource constrained here, but here's the code that you can run on your local machine. And it printed out 5 pages of Python code, which is how you program model building in most organizations.
Hey, we got about 30 seconds here. We got a number coming. Yep.
All right. Let me just tell you that we're, I think we're over the hump in terms of the June swoon, and this is the period from June to August when the market in an election year is an 80% shot for being up. So don't get too bearish.
They say sell in May and go. They say sell in May and go away. Christian Fromhertz said this year it's going to be sell in May and go insane. I don't know if you believe that or not. But.
Well, even with sell in May, healthcare and consumer staples did well in May to November. So there's a lot of different ways to slice this cat. Guys, enjoy.
Thanks.
Pray for the best here. Is that a big spike in the S&P? Sure.
A little spike. We're up about 3 points. Jobless claims usually isn't a huge mover here, but we're still
So
waiting for the
jobless
numbers.
claims
AB's
came in
going to grab it.
slightly hotter than expected. 229,000 versus 220,000 estimated. 221,000 prior, so that went up by around 8,000 jobless claims. Unit labor costs went up 4% versus 4.7% estimated. So the labor costs was actually cooler than expected, which is good news for inflation, but again, it wasn't like a huge miss there. So we'll see how the market
Leaking it
interprets
right
that.
back.
Mark, always great to have you on, man. Always great to catch up, hear your thoughts. And yeah, I mean, let's try to enjoy these all-time highs and focus on the positives instead of thinking, why isn't my portfolio 80% Nvidia right now?
Right. Well, I'll leave you with the mantra that everybody is now quoting. You know what comes after all-time highs?
More all-time highs.
New all-time highs.
Let's
So
go. Woo!
it's going to be good. Talk to you in a couple.
All right, Mark.
Thanks, Mark.
Enjoy your Thursday. Have a good one.
You bet. You too.
All right, guys, that was Mark Chaikin, Chaikin Analytics. I'll drop the link to his site in the chat if you guys want to check out more from Mark. You know, his power gauge and stuff, you definitely want to check out. Very, very good work that Mark does. And there's not a lot of people on the street that we like to talk to more than Mark Chaikin.
So jobless claims 229,000 versus 220,000, and it appears like that's a hot number. Remember, jobless claims are backwards. People are actually wanting to get more jobs. So when you see the number higher than expected, that actually means, oh, people are a little bit, hurting a little bit. More economy maybe slowing down a little bit, which is why you see the spike there.
Just to Mark's point about, in the past, all-time highs, it's kind of counterintuitive because it goes against conventional thinking where you're like, I don't want to buy at all-time highs. You want to buy low and sell high.
Yeah.
But in the past, like buying at all-time highs hasn't been a terrible strategy. I think there's data out there that actually supports that. Like if you buy only at all-time highs and then hold from there, that your returns are actually better than buying or during normal market times, which kind of makes sense because you're typically buying in like big bull runs. But there's still, to me, we're not at this moment where there's, a 2021 type moment at the end of 2021 when, ARK was at $200 a share, whatever, where there was just so much euphoria driving the markets, because I still see a lot of bears out there. Maybe it's just my Twitter feed, but I saw a stat the other day that 50% of Americans polled thought that stocks were down over the last 12 months. Or no, sorry, it was from year to date. That's thought in 2024 stocks were down. So 50% of Americans out there, and I get it, people aren't watching the market that closely, but that means like whatever information they're getting, whatever news they're watching is telling them things are worse than they are in terms of, I guess, either the market or the economy. So to me, like seeing stuff right now makes me feel like compared to other times when we've been at all-time highs, this isn't a euphoric type market. Do you guys agree with that or no?
Yeah, I think so. It's definitely not euphoria. And we've actually argued on this show, half the stocks are kind of in bear markets. I mean, we've gone nowhere on all the small caps for 3 years now. I mean, we've talked this on the show. China, definitely bear market, been going down. Pockets, of other areas. Europe's been doing pretty well. Canada's come back. Overall, S&Ps are at the highs. But when you get outside the S&P and outside, even, those main companies here, it's not like we're straight up. It's not like we've just been rip-roaring, rallying, and just going. I mean, look at the DIA. Look at the Dow. Joel, the Dow. I mean, we started the year, what are we up? What are we up on the Dow? Like 3%, 2%, 3%?
Yeah,
not
just
much.
looking at
not much on the year.
Dow
Off the
year to
highs.
date, we are up 3%. Wow, Dennis, you're pretty good at this.
So anyways, I don't follow the Dow closely, but I mean, it's widely followed, like we're not like this market has just been rip roaring and killing it here. There's certain stocks that have been rip roaring and killing it. And if you're not in the mega cap trade and you're not in, the tech trade, and you're not in the AI trade, your portfolio is probably massively underperforming because there's a lot of stocks that have actually just not done very well.
Yeah, I saw a stat yesterday. Bessembinder, I don't know who that is, found that 86 stocks have been responsible for half of the stock market's total wealth creation, which is $16 trillion. And
for this year.
Yeah. So the top 86 stocks, which we've talked a lot about that, that like, oh, the breadth hasn't been great and people see that as a weakness for the market. But we had Todd Gordon on a couple months ago who basically said, like, why? Why does that matter? Why do we need small caps to rally? Small caps are
We don't.
small caps for a reason. They're small caps
Mhm.
because they're not as productive. They're not as profitable as these big names that money is flowing into.
And you
So,
want to know the funny thing about that is they are. There's certain companies that aren't there, but the multiple on the IWM, the PE multiple, is much less than the overall market. So you could argue that these companies are more profitable, on a mark from comparing just to market cap. Now, again, lots of companies in the IWM not doing very well. So there's definitely probably just a portion of those companies that keep that multiple higher, much like we see with Nvidia and the S&P. But I mean, it's just they've underperformed, and underperformers underperform. I mean, take it back to William O'Neill. Like, let's have the conversation. When the market really started, traders became momentum traders, and they buy what's high, and it goes higher. I mean, William O'Neill obviously was one of the first traders out there saying we buy high and sell higher. To what your point you started this segment with, just 3 minutes ago, AB. So, I mean, this is the way the momentum, the trader's mindset is. It's natural human tendency also to chase what is hot, to go into what is hot. So, I mean, this Nvidia, William O'Neill would be killing it if he was still alive today, killing it on something like this.
yeah. I mean, let's we do have some earnings. We'll get to those real quick. So let's start with why don't we start with Five Below and then we'll get into Lulu. So Five Below, interesting yesterday. I mean, so because we've been talking about this trade down effect, and typically in times of really weak, recession times, weak economies, like dollar stores tend to do well, which Five Below is a little bit different because you're not buying like necessities there. You're buying like knickknacks and toys and games and stuff. But Five Below, which, the whole premise of the store is everything in there is $5 or below, reported earnings yesterday after the close. And look out below because the stock got hit, trading down more than 17%. Company cut guidance. EPS came in at 57 cents, missed the 64-cent estimate. Sales came in at $811 million, missed the $837 million estimate. Again, lowered guidance. Something interesting here, and this is like where, I don't love a lot of times like what analysts, when they're changing price targets and stuff after reports, but interesting from Piper Sandler, a take they had on Five Below was that if, they were talking about like political stuff. And if Trump wins and increases Chinese tariffs, it's really bad for Five Below, because if you think about a company selling stuff for $5 or things for $5 or less, a lot of that stuff's coming from China. And if they have to pay more, then they're not going to be able to sell a lot of things for $5 or less. So this stock got, hammered on that. But I just thought that was some interesting color there from a Piper Sandler analyst, kind of thinking ahead and outside the box there.
Here's my outside the box thinking. I think I've talked this stock before. The issue with Five Below, and I don't know, I don't follow it. I didn't look at the report, I didn't follow the fundamentals, but just thinking common sense is inflation has got to be squeezing their margins. I mean, if you can't raise your prices because you want to keep everything at $5, everything is coming up in price. It's got to be squeezing their margins. Are they going to change it to 10 below? Are they going to change the store to 10 below? Are they going to break the $5 buck? The dollar stores all had to break the dollar. Then most of those dollar stores sell stuff for over $1. Maybe Five Below has already done that. I don't know. I don't go to these stores and shop. But if they are trying to keep prices at $5 or below and really going with their name, and the thing about this, if they break the $5 and you go into the Five Below store and you see something for $6, it's probably going to piss you off. So they got to think, with inflation the way it has gone over the last couple of years with prices going up, that Five Below margins are going to get squeezed. So I think common sense would have said to sell this stock when we started to have inflation problems here. And maybe it would have been early because the stock did run up a little bit after that. But really, if you look, inflation started to run rampant after COVID 2021. That was $200 stock. We're $108 here now. We're down 50%. So if you were just playing the common sense trade here and saying margin's probably going to get squeezed, they're going to have a hard time raising prices. People want to be paid more. Products are costing more. Inflation, imports, tariffs, coming in, it all adds up to margins getting squeezed here. I don't know if they're going to change the name to 10 below. So that might be an issue.
Why, we're falling out of bed here, Dennis. So watch out on the downside here. We're continuing to make new lows
Hot or
after
not.
that data. Yeah, that data came out here. Five below. There's just a step down seller here. Someone's just they're out, man. They're just bid, and they're whacking it. My next monthly low comes in at 101.85. That's still $7 away. I mean, it's not out of the realm of possibilities, but this is B1 where you really, at 9:29 and 59 seconds, find out where that pre-market low is and then see if someone attempts to make a stand here. And but 101.85, that's your next monthly low. You're going all the way back to August of 20. And I don't know where, when there's no bids, there's no bids. That's what you're looking at here in five below. I
What's the
did see.
catalyst? Like, what is the turnaround story here? Inflation, prices actually go down? No, that's never happening. That never happens. I mean, what if you're management
I don't know.
and you're sitting here at five below and you've got everything marked at $5? And I don't know if that's the case. Maybe they already have broken it. So, Chad, if you know there's sound $6, $7 stuff and five below, let me know. But if you have the full intention to honor your name and say five below, inflation just screws you. Like worse than anything. Like worse than any other business. So I'm like looking at this thinking, why in the hell would I invest in this? I know it's down here today and you want to buy cheap, but I mean, if we're going with William O'Neill and Can-Slim methods here, they are not buying five below here today. They are not buying five below. So I think just common sense here tells me that this store is going to have problems.
You'll get a pop when they close some stores. That's what they need to do. That will be the next thing. They'll boot somebody out. They'll close some stores. Yeah, I mean that will be when you see the pop. They'll be like, "Oh, we're closing stores. We got a new a new person in here." You'll get a pop, and then we'll see what happens if that pop holds. But they're
when you own the retailers that their business model is closing stores or not honoring their name, and somebody is saying that they are doing some stuff for $6 in there. I'm not sure if that's true or not. I mean, there's just so many better places to put your money. There's so many better places. I'm not saying Nvidia that we're buying it up here at 12.4. I think I'm on the record here today saying Nvidia is likely to show weakness post-split. So I'm expecting that. It's had a hell of a run. I don't intend to sell any of my long. Will I, trade it? Maybe. Maybe I'll trade in my trading account here. But, at this point, I'm going to wait because right now you're in the full pre-split run here. You got 2 more days of it potentially, but it's way overbought. So I don't think you just take your five below money and put it in Nvidia at this point in time. I'm not putting new capital to work in Nvidia. You need a dip. You need some type of pullback. But think about, on the next pullback, what you want to own. Have your shopping list ready because we get these inevitable pullbacks here. Five below is not on that list, man. It's not anywhere. I can write a whole list and it's all going to be AI stocks, a lot of it technology related. Maybe there's the odd one, and I bought something the other day. I bought Dell, like using the dip to, the weakness to, show. I'd probably buy some HPQ too, maybe, because I think there's going to be a play there. But it's not five below, folks. This is not on my shopping list. So maybe it bounces today. I mean, nothing goes straight down. Maybe, this market's so hungry. 20 down, 24, maybe goes 108, 115. But is this going back to 200 anytime soon? Is this the turnaround story? Is this the AI play? Maybe it's going to be AI bots running five below. They have no labor costs. Maybe that's going to help them. But you're all reaching there. Look for the stories that are going to drive price. Think about how, we've been successful, calling some good stocks. What I did, with my NASA acronym off the bat. I was looking at good fundamentals with those 4 stocks and potential story. What's going to carry it? AI, Nvidia, AMD, SMCI, carrying those. And I threw the Amgen in because I thought the Amgen could be the number 3 player. It's still, out. The jury's out on that one. I'm actually up about $10 on it or something. But, it's potential weight loss. These are stories that are in the market not going away. Invest in good companies with good stories. Five below, not one of them.
Dennis, when you were talking, you just induced a physical reaction in me. I started tasting really cheap tequila in my mouth. So you said 10 below, and that was a bar in my college town that was you only went there, on really long night. Actually, now that I'm saying it, I think it was called 10 below because it was in this grimy basement. So maybe it was 10 feet below the street level. But that just brought back some memories to 10 below.
10 below.
If anyone's in
Nice.
Missouri, but
That's funny.
let's move on here from 5 below to Lululemon. Someone in the chat was asking, did I buy it? I did buy some shares of Lululemon, not right before the earnings, but a couple weeks ago. So far looking good on that, but knock on wood. Let's go ahead and pull up the numbers here from Lulu, because really the report wasn't great. But we talked about this yesterday on the show.
Low bar.
The bar had been lowered significantly heading into this report. You know, and I mean, like, what was it was trading down, I want to say like 30 or 40% from the last earnings report into this one. So EPS came in at $2.54, beat the $2.39 estimate. Sales came in at $2.21 billion, which slightly beat the $2.2 billion estimate. But then some kind of weakish guidance, soft guidance looking forward. But, you know, I guess the strong quarter and the low bar was enough to send the stock higher. It got as high as $340, around $342 actually.
Got over that.
Over
It got
350.
over that. Yeah. Yeah.
Oh, okay. My chart
350, 245. Just real quick comment on Dennis's comment regarding 5 below. I don't think they're going to change their name to 6 feet below.
No, that'd be bad.
That's a good one.
And when I looked it up here, when you use the term 5 feet below, that means you're close, right?
Yeah.
As far as your health goes. So I don't think they're going 6 feet below. You know, when I originally saw this Lululemon pop last night, I was thinking, man, people hate when we talk about sports, and they're probably going to hate even more when we talk about fashion. And we're talking about fashion here with Lulu. That's a nice pop. It's a relief pop. You just get the feeling that 350, 245, man, that's a ways away. Doesn't really feel like it's going to be getting back up there today. I will just look at an area that it's still above here. And before you had your last breakdown to the move, wow, you had, oh, wow, that is up at the 348 area. It's still, no, that's still a ways away. Your next low is, or your next high to contend with right now is 338.75. So keep an eye on that. I know you're hoping it goes back to 350, but your May 17th high, 338.75. I'd keep an eye on that. We just popped above that in the last 30-minute bracket.
You know what the problem here is? You guys know, you listen to this show.
Overhead supply.
Overhead supply. Bag holders all over the place here, and multiple coming down to a market multiple, but still not that reasonable. And if the growth is indeed slowing, and it doesn't look like from this report that the growth is accelerating, I think you're going to find sellers into this rally. So I know, and we're already 20 bucks off the highs. It's a very exciting day to say the stock is up 8% here. You know, it looks good. I think there's a lot of investors that are probably very excited to ring the register on this that just bought it recently. Or if, you know, you bought it a month ago and you're being made whole, they're excited to get their money back. I don't think this is blasting off and going up 340, 350, 360. And I might be wrong. Nothing works 100% of the time. But you sell rips on stocks and downtrends, and you buy dips on stocks and uptrends. Right now, Lululemon's clearly in a downtrend, meaning I would be a seller of this rip from a technical basis.
I don't disagree, Dennis, and I think it could move lower after here. I mean, I don't want it to because I just bought it a couple weeks ago. But the valuation, part of the reason I bought it was because the valuation did look reasonable to me. I'm in Benzinga Pro right now, 21 forward PE, price to sales of around 3.94, we'll call it. So not cheap by any means. And again, like you said, if the growth is truly slowing down, it could be like a value trap. But I don't, you know, like the way I see it basically is that if they just hold steady, if they just hold consistent with their numbers right now, then it ends up being a good investment in like a few years' time, which again, when I'm buying stocks, it's more for the long term. So anyone out there watching who's like newer, then, you know, a lot of times I'm not speaking about like swing trades or whatever. I'm buying a stock to hold it for like multiple years. But you don't think that's a reasonable valuation at this point at 21?
No, you know why? Because if growth is slowing. So when you buy the S&P, which is trading roughly at 21 times market multiple 2021, you're getting a portion of growth in there. If you're buying a specific stock that's not growing, or, you know, then you're not getting that. And, you know, we see a lot of retailers, AB, trade with multiples of 10, 12, 13. So some retailers that are growing exponentially trade, obviously, it's all built on growth. Costco has always grown, been strong, always traded with a premium multiple. And Lululemon always trade with a premium multiple as well. But if that growth is indeed still slowing, the value traders come in around 15 times.
Holy
14
cow.
times.
To your point, Dennis, Abercrombie and Fitch, with their earnings, is only trading at a 2 price to sales and a forward PE of 20, and you have more growth there
Growth like crazy.
than Lulu. So
Opposite stories here. Abercrombie accelerating growth, and you're paying the same multiple for decelerating growth. So just with Fundy hat on, it's like there's a reason this is selling off, and it's because the growth is slowing and competition is there. Now, again, if they can find a way to reaccelerate the growth, you'll be happy you paid 21 times earnings for this. But you're betting on a turnaround story here as opposed to, just a value trade. Because if you're coming in for a value trade, I think you got to come in at a lower multiple. If you're banking on this being a turnaround story, which it very well might be, Lulu has a great name for a long time, then you won't mind paying 21 times, but you need the turnaround story here.
yeah,
I'm not sure it's there. I'm not sure it's there. I don't know. I'm unknown on this one. I'm not buying it. I'm not shorting it. It could be there, but as just a pure value trade, I would say I'd wait a little bit longer.
Yeah, and maybe right now isn't the best time. I mean, and again, like part of my thesis for buying this long term was I just was like, people are hammering this stock like it was a fad. And I'm like, I don't think that's true. I think in 10 years, you're still going to have people shopping at Lulu and it being like a mainstay of a lot of people's wardrobe. But to people in the chat's point, as an investor now and as a shareholder, I would like to see Lulu like shake some things up, do something. And they did have an executive shakeup. I think they're like head of product left a month ago or so. But like if they do something in the next, couple years, get into one thing Abercrombie's been doing is they've been getting into like wedding gear. So now they're doing more formal clothes and selling a lot of dresses to women for weddings and stuff like that. And I'm not saying Lulu should follow suit and do exactly that, but something like that where they start expanding into a new market and really kind of get some growth back there. I would love to see as a shareholder now. But all right, let's move on from
Before
Lulu.
we move on to Lululemon here, I think a problem that you're going to run into with Lululemon is you have, like, you're talking about the generational buyer, right? The people that that are younger or trimmer, or and these people are going to be moving up in age, right? And Lululemon is more of the tight fit. So unless you get that, unless people just keep slim and keep they're not going to be buying
Weight loss play.
Weight
loss drug play here.
Who did we talk about that with? Ryan Craver, that people are going to be changing their whole wardrobe.
Yeah, so maybe it is a play here.
And
this
people
is
are going to want
weight
to
loss drug play.
But it's the younger generation. That's what I'm alluding to.
Mateo's got a good point. Lulu should start making scrubs for the healthcare employee. That'd be good. Because you've seen how much like Hoka, half of Hoka sales are to nurses and doctors that are on their feet all day. Like, start targeting that industry. Start targeting. Yeah. I mean, they make golf clothes already, but if Lulu, started stealing some market share away from like other golfing clothes company, like targeting certain industries like that. I'd love to see Lulu go out.
What about humanoids? It could have yoga pants for humanoids.
Yeah,
there you go. There's a growth industry.
Exactly. No, who was that? Someone in the chat. We were talking to one of our guests about like the people are going to need to buy whole new wardrobes after the weight loss drugs.
I think it was Ryan.
I think it was Ryan. There's a point there. I could get behind that, but you know what? I get behind it at a lower multiple.
Healthcare can't afford Lulu. What are you talking about, Scarjo? Do you know how much doctors make? Even nurses make a good amount now. But all right, let's move on. We got a few minutes left. Other headline this morning: Robinhood, ticker Hood, is making an acquisition, acquiring Bitstamp, a company in the crypto space. I don't know if this is an exchange or what, but for $200 million, all cash deal. Let me pull up the exact details on here. Robinhood acquires global crypto exchange Bitstamp for $200 million. Robinhood expects the deal to close in the first half of 2025, with the final transaction value to be in the region of $200 million. So doubling down kind of on its crypto trading aspect to Robinhood. But how is the stock trading this morning? Because a lot of times,
had a pop. This thing's been on a nice run. We're trading up 60 cents. You have Bitcoin. You have that catalyst. You have the GameStop catalyst. Yeah. But you're coming in a great area here. If you've been looking at this triple top at 22.30, You did exceed it in the pre-market, not by much. So that's great level right there. Keep an eye on that one. Above that, you're not looking at a monthly high until you way up there back in December of 21. That was up the $26 area, but use that as a good swing area. You hold this 22.30 or first take it out, then get a sustained bid here. Things wide open here on the upside for Robinhood. Nice move, little consolidation after that triple top, but keep a close eye on that one, folks.
I don't love this move if I were a long-term investor in Robinhood, and I'll tell you why. Because a few years ago, I mean, Robinhood obviously went crazy after it IPO. The stock went crazy. I forget exactly which quarter it was, but the stock got a huge pop one quarter on earnings, and then the numbers looked insanely good. And then when you looked into the numbers and the earnings itself, it revealed that Robinhood, like more than like half of its profit or trading volume from that quarter was not just from crypto, but from Dogecoin alone, because Robinhood, like you couldn't buy Dogecoin, I don't think on like coin, like, I don't know, Robinhood was just a big benefactor of this big Dogecoin run in 2021. And I feel like making moves like this, kind of further digging themselves deep into its, stance in crypto, puts more reliance on the crypto industry to a point where if you get a quarter where Bitcoin's down 20%, which we've seen that happen many times before, Robinhood, like, I would like to see Robinhood become this like mainstay of stock investor or stock brokerage for young people like myself. And then if you're too reliant on crypto, it's just going to start trading with Bitcoin. And when Bitcoin's down, their trading volume is going to be down. So again, like, I don't know if I necessarily love this long term.
I think Robinhood's got a lot of things going well for it, and the execution that Vlad has done here has been exceptional. And you've got a stock that is actually a company, a brokerage company that, came out with 24-hour trading for all stocks. I mean, you got the exchanges that have never done that. The exchanges still aren't doing it, but they do it. I mean, and now IB has followed suit and other ones are following suit. But you think about, like, they cater to that retail market in such a good way that they've given them, and it's obviously they got market makers, Blue Ocean, making markets. So, but they've set all that up. It's like there's innovative over there. And you know what? I think Bitcoin's going to go for another run, and Robinhood's going to be the beneficiary of that too. The valuation has never been great on this because, they obviously, I don't know, they make money, but they've never made a lot of money. But so it's not really a valuation play, but the story here is still very good. The story here is, innovative, catering to the retail customer very well, and, coming up with products that the retail trader wants. Their retail traders like trading at midnight. They like trading at 1 in the morning. They got some serious volume going on in this 24-hour trading. I mean, maybe all the other brokerages are going to follow suit, and that's going to create competition. But they love the no cost. We know it's payment for order flow, and there's still hidden costs. But people don't like paying commissions. They're all over all of that. I mean, Robinhood's done so many things so well here. And technically speaking, the chart is not, telling anything else. Like, it's in consolidation here, consolidating at the highs for the year. It looks like it wants to break out and go higher to me. So full William O'Neill. I think Robinhood goes higher.
I still like Robinhood long term, and I agree to all those points. But again, my point, I guess, was more just saying that the further Robinhood attaches itself to the crypto trade, the more it opens it up to being volatile with crypto.
And
then
it is
exposing itself to like a big downturn that if Bitcoin has a bad quarter, we know what happens is that trading volumes go down. A lot of people aren't trading Bitcoin or Dogecoin or Ethereum as much as they are when it's on a run. And then that, could hurt Robinhood that quarter. Whereas like stock people, I think, are a little bit more consistent when they're just adding to their ETFs, whatever. But I like, to your point, Dennis, I love all of the, tools and whatnot that Robinhood has given to retail traders over the past few years. It's been amazing. And I use Robinhood. I'm a Robinhood customer. I'll be the first to admit it. People give me shit for
You know who's really gotten this stock wrong? And probably when they turn and get bullish on this thing, will probably be a time to exit. But remember when this thing was traded under $10 back in 2023, and I'm trying to look at it in pro. I thought people were slapping like a $5 price target on it, or $7. Remember that? I think even Goldman did. I
Well, a lot
remember
of
that.
people are looking at thinking that it'd be a takeover target at that
Right.
valuation.
That's what I was thinking at that point. I don't know how I screwed that trade up. I think at
To
like
AB's point
11 or
too, Joel,
something.
though, to AB's point, this is a crypto play. I mean, it is a crypto play. And Bitcoin bottomed in October. And Robinhood bottomed, back in October, really. And it's been straight up since. So, I mean, this is a pure play on crypto. So if you buy Robinhood, you are in essential buying Bitcoin. I think Bitcoin goes higher, though. That's why I'm still bullish it. But I think you got to be very careful, saying, stocks, it is very much a crypto play.
Mark this down, folks. When Citigroup upgrades it or does something when they come off their sell rating here, Citigroup went to a sell on April 11th and had a price target of $16. So when they upgrade this thing or give it a buy recommendation, then you might want to head for the
Play the
exit.
Citigroup play.
I
Yeah,
thought so. I thought you were gonna say, because I know Goldman was one of the names that people were talking about potentially acquiring Robinhood. It'd be funny if Goldman put like a $5 price target on it, saw the valuation go down another 100 million, and was like, okay, now it's a good deal. Now we'll buy it. I don't know if they're allowed to do that, but that would have been.
I think obviously, the administration we have isn't very, but they're going to fight a Robinhood, and because the stock price has come up so much now, I think that argument of the takeover candidate's probably gone. Was that $8-10? It's like, well, these clients
there was something.
Yeah.
Run too much now for it still be an M&A target, I think.
100%. Well, but there has been a bunch of consolidation in the brokerage space.
I think it's going higher.
Whether it's like E-Trade, Morgan Stanley, E-Trade, Charles Schwab, Thinkorswim. There's been a lot of consolidation in that space. But all right, it is 9:01 a.m. Eastern. That means it is time for us to wrap up the show this morning. Joel, who do we got coming on with us tomorrow?
Saw a couple requests over the week for Tim Quas. So it's not going to be a market structure Monday. It's going to be a market structure Friday. And that should be interesting coming into a weekly options expiration. So, Tim, and then, of course, we have the all-important jobs number tomorrow morning at 8:30. Tune in live. That should be fun. We're having Tim come on at 8:15 so we can get his take on the market, and we can be focused on that jobs number.
Dennis, what should I do with my Microsoft calls? Should I sell them at the open for whatever I can get for them, or should I hold on and hope for a
There's this trade that I think could start here. Nvidia's gained Microsoft weakness. They're attacking it. They want Microsoft, and it's literally like, I don't know, it's very close to being where Microsoft is. It's within 1 or 2% here now. I think it feels like it's inevitable that they're going to hit it.
Here's the good news is I sold enough contracts of it yesterday to get all my money off the table, so I could just let them run and then hope that there's some sort of like broad market rally that brings Microsoft up again.
But you had that yesterday. You had the broad market rally yesterday. Are you the expiration this week?
Yeah, Friday.
Yeah, it's hard not to ring the register in yesterday's run.
I'm worried that right when the market opens, they're going to get killed anyway, and I'll be.
Yeah, they'll get killed, but you know what? You're going to have the S&P is a lot of times off. It's not really that much of a lower opening, but see if you could, cue something up, and then if it trades near the close, 424.01, that was right near the high of the day, just boom, don't mess around and look for that. Then, if you don't get a pop up to that area, they're going to be selling in weakness. But that close and the high right by each other to see if they can get it back. A lot of times, you have these lower opens and then, just in the quick few seconds, they pop it up. A lot of times, so the options market makers don't open up they don't give you a market until things settle down. But
so here's the trade. My average cost was 15 cents. They're up to 60, or they were at 64 cents yesterday. So up 326%. I did have 10 contracts sold. Half
what
of them.
Strike do you have?
430.
I can't. I'm looking at that. I don't have Robinhood, so I'm like, I still don't see where the strike price even is on the damn
it's
thing.
up here.
Oh, it's up there. Okay.
430 call. So yeah, I mean, I bought them when Microsoft was at like 412, and then it ran $10. So it was
you're gonna see a big with the dollar fall here today and losing a full day. You're gonna see.
They're probably gonna open at like they're probably gonna open at
maybe selling the strength.
All right, we'll see. All right, thanks for helping me walk through that. We will see you guys tomorrow morning, 8 a.m. We do have live trading starting up right now. This stream will redirect you there. Stay green, guys. Peace and love, y'all.